Canada's August retail sales are up 1% month over month, mostly driven by increases at motor vehicle and parts dealers. For more on that, we're joined by Tony Stillo, Director of Canada Economics at Oxford Economics Canada. Tony, thanks for being here.
Thanks for having me on.
Let's get into this, shall we? Maybe just give me, first of all, your big picture overall. This was right at expectations of a 1% increase for the month of August. A lot of this, again, for Canadian consumers clearly still buying cars. But what do we make, again, of the overall numbers?
Well, the overall numbers are seesawing all year, and they've essentially gone nowhere. Sales volumes are essentially the same as they were in December. So although we've seen these numbers bounce around and they were up in August, it was from a drop in July, and Stats Canada expects they'll be down again in September. So it's been seesawing and essentially been flat.
Which is interesting, too, Tony. As we talk about, there's been a lot of pressure with the trade war with the U.S., the tariffs, and otherwise. So, with that seesaw, does anything surprise you, I guess, at this point? Do those auto sales numbers surprise you or otherwise in some of this data?
The auto sales did surprise me because the other data from Stats Canada, the new motor vehicle sales, were down in August on an unadjusted basis, so not adjusted for seasonal patterns. But even when we adjusted, we thought they were going to be down. So that surprised that they were up. And also with the uncertainty from the trade war, job insecurity and the like, that we thought big ticket items would be, those decisions would be on hold. And we still think that's largely the case. Even the uptick in August, the motor vehicle sales came from pretty flat performance the previous 2 months and down the months earlier. So it's a bit of catch up, I think.
And for that, too, had an earlier conversation about those numbers in the auto sales in particular. And the take was that Canadians and right now maybe putting home purchases on hold because we're seeing it, but then still using some of that savings now for some bigger ticket items like cars. Would you agree?
That could be the case. We're actually seeing an uptick in sales, though, on the home resale market, but that's from very depressed levels. And I think in that case, lower prices are prompting people to get off the shelf, and as well as lower interest rates. And so we think there's a lot at play. There's a lot of uncertainty out there. And, you think of consumers, they have to have both the ability to spend and the willingness to spend. The ability is affected by their tight household finances. Even the demographic shift of declining and slowing demographic demand is an undercurrent. And then in terms of the willingness, there's uncertainty, there's job insecurity, and that's, I think, keeping some people on the sidelines, even though we've seen some of these numbers bounce around.
Yeah, and it's tough, too, for many, many households and otherwise, too. Curious about general merchandise retailers. Maybe just touched on it a little bit, too. Up 1.1% in August after down. That's one of those fluctuating ones, but it still appears right now that, consumers are still willing to spend money on things, not only just needs, but maybe some wants.
Yeah, and again, keep in mind, there's going to be a dichotomy out there. There's going to be those individuals that aren't strained by their mortgages. They may not have a mortgage, and the higher income types that are really in pretty good shape. But the ones that are strapped month to month on a cash flow basis are the ones that are hurting the most. So on aggregate, we see these numbers bounce around and really on aggregate gone nowhere.
Do you think, though, at this point, too, there was another conversation we talked about, another point that was made about, some Canadians, maybe in particular, some of the older generations that have had very good years investment-wise. The markets have been up. They have made a fair amount of money. And now they're, sinking some more of that money back into sales, or, into buying consumer goods and otherwise. Is there something to that? Because we know at the other end of that spectrum that it has been very, very difficult, for lower income households, to be spending, the way that they used to because of the cost of living crisis.
Yeah, and that we'd call the wealth effect. Absolutely. I think that's at play as well. We've seen it not just in Canada, but in North America wide. So the big gains in the stock market are disproportionately held by higher income households, and they are supporting the spending probably to a disproportionate degree.
And is that clothing in particular, right? We saw clothing, leather goods, up, over 3% for August. Is that in particular, or do you know what we attribute that to?
Oh, again, that's another one of those that's bounced around. So we've had lower prices, and so you may be seeing closeout sales that prompt some clothing purchases. And again, it's been almost all the subcategories have bounced around up and down and really shown very modest to flat trends on a kind of a year-long basis.
And let's continue just on that point too, right? We saw that StatsCan, preemptively say that we're going to watch sales dip again in September. I think they said 0.7 today right now. We'll see what those actual numbers come out to. Are you expecting this, that bouncing around, that fluctuation to continue right through the end of this year and into the holiday season?
Yes, we are. Again, keep in mind, although on a normal basis, unadjusted basis, sales rise in the fall for the holiday season, but that's why they do things on a seasonally adjusted basis. So if you abstract from the fact that it's the holiday season, we're looking for sales to stay quite subdued, and that'll linger through. We've got modest job losses in our forecast, a stagnant economy, but on the cusp of a recession. If the trade war impacts broaden to the rest of the economy, we could see an outright broad recession, but our current take is that it'll just be a stagnant economy. But that basically means the consumer is probably doing better than the other directly hit sectors like traded sectors, and I'm talking about international trade now, and business investment. So the consumer, we expect it won't be collapsing, it won't be cratering, but it'll have really subdued growth, and pretty much the seesaw pattern, maybe a slight upward trend. We do expect the Bank of Canada to cut again next week. And so that helps on the financing of those large ticket items. So nothing to write home about, but we do expect a steady consumer, but nothing extraordinary in either direction.
Yeah, you answered my last question. I was going to ask you about the Bank of Canada next week too, but you are still expecting none of this, even the inflation data or otherwise, nothing moves the needle. We are expecting another cut.
Well, the inflation data last week, the headline number rose to 2.4% in September, but if you looked at underlying trends, they were kind of in the 2.4, 2.5% range where they've been for a while. And the bank thinks that it's in that range as we do. And given that and the fact that, they want to put a little bit of stimulus, not a lot, because we're anticipating federal budget's going to be austere on the operating side, but quite expansive on the capital expenditure side. So on net, that's going to be some fiscal stimulus down the road. So I think the bank, we expect them to cut next week a quarter point. That's as low as we think they'll go in this cutting cycle, and then they'll be looking for the fiscal side to do some more support for the economy moving forward.
Tony Stillo, Director of Canada Economics at Oxford Economics Canada. Thanks for this, Tony. Appreciate it.